So we're starting off, we've got, firstly we're going to calculate the sales budget for PowerPooch. So the first line we need to do, we want to know the number of units that they're going to sell each period that they've budgeted for. So given to us in the question, so January they're going to sell 115, February 140, and March 150. A quarter is just the total of those 3 months. We then multiply in the sales budget by selling price, so it's constant throughout, so 1,100. So this gives us our budgeted sales revenue for the period. We can then take these sales figure estimates into the production budget. So in the production budget, we start off with that first line from the sales budget, what we want to sell. We now need to know what is the desired ending inventory for the period. So we look to the question and it says that the closing inventory of at the end of each month should be equal to the budgeted sales amount for the next month. So for January, the same as what we want for February, so we make the entire production of next month in advance. So 140 in January, 150 in March. March we're selling, so in February we want that to have that 150. And then in March we want to cover the 110 that we're going to sell in April. The quarter is, for these calculations, is the beginning or ending month is equal to that beginning or ending. So the desired ending, so March is the last month of the quarter, so the quarter is equal to March, 110. So now we can add up what we need to produce for the period. So what we want to sell plus desired ending minus what we want to have on hand at the beginning. So we had 75 in January, then February, the ending from January becomes the opening for February, so 140. The same pattern for March, the February ending becomes the March beginning, 150. Then the quarter is the beginning, so January being the quarter. So we can then minus that beginning inventory and we've got the number of units to produce. We then go into the direct materials budget. So we take from the production budget what we need to produce for the period in units, we multiply it by the direct materials per unit, which has also got the cost per unit. So multiply for each period 368. So the cost of production is that units to produce multiplied by costs and number of units of direct materials. We now need to add in desired ending, and the information in the question says that they introduce a policy where they want to have $100 of raw materials left at the end, and so $100 for each period. So this gives us the total cost of direct materials that we need. We now can less beginning inventory because we've already got that on hand. So the policy of $100 only just started at the beginning of this period, so we had nothing on hand. So 0 for January, but then February and March, we have the desired ending set aside of $100. So cost of direct materials needed, less the beginning inventory, gives us direct material purchase that we need to go and purchase for the period. So next, the direct labour budget. So we take, once again, the units that we need to produce from the production budget, and we're going to multiply by the number of direct labour hours per unit. So that's 5 hours from the information in question. So this gives us the number of hours needed. So what's the cost? We're going to multiply by the direct labour hour costs. So this is the cost charge rate when an employee clocks on or clocks off to the job. So given to us in the question is $35 per hour. So multiply that by the number of hours. This gives us budgeted direct labour costs. So next, the overhead budget. So we take that production, once again, the number of units from the production budget, multiply by the variable rate, because some overheads are variable. They increase or decrease with the amount of production. and we're told that this is $55 per unit, so multiply by those number of units to produce. The fixed costs are fixed regardless of production level, and we add these in, so $38,000 each period. So the variable and the fixed added together gives us the overhead costs for the period. So next, the selling and admin budget. So we have the number of units that we plan to sell, not production, because things like sales commissions are based on number of units sold. So these come from the sales budget. Then multiplied by the variable selling and admin costs. So that included a sales commission of 2% per unit. So 1,100 is the selling price minus 2%. So that's $22 commission on each unit sold. So that gives us our variable selling and admin costs. Add in then this fixed selling and admin costs, things like depreciation on the office equipment. So that gives that's 2,500 from the question. Then variable plus fixed gives us total selling and admin budgeted costs. The ending inventory budget, we need to first calculate the cost per unit. So direct materials told to us as $368 per unit. Direct labour, this takes 5 hours to construct each unit, and the hourly rate is $35. Multiply the two together and we get direct labour per unit cost of $175. Overhead, we've got that variable, $55 per unit. Then to calculate the fixed component, we take that total fixed overhead of $114,000 and divide it by the number of direct labour hours, units. So we need to multiply those total units that we want for the period, 440, by 5 hours per unit. So this gives us a fixed rate of $51.82 per direct labour hour. Then multiply that by 5 direct labour hours per unit. So the fixed overhead costs $259.10. So the cost of each unit, $857. We then now apply that, our cost, to our balances, and so for raw materials we have left in the ending balance $100. Work in process, we could work out if we had some balance there, but we don't. No units were left behind, they were all completed during the period. So finished goods, we're going to have 110 units at a unit cost of $857 to give us finished goods of $94,270. So our total inventory for the period is $94,370. We then look to the cost of goods sold budget, and so we can put in now beginning finished goods, $65,300 to give us goods available for sale, then less the ending finished goods, so those left behind, not sold for the period, $94,270, and now we have budgeted cost of goods sold. So what's been sold in the period, $348,150.